What's going on, everyone? So we had some inflation reduction filing hit the register today. This is regarding the Jobs Act and the adjustments therein. And they adjust this every 5 years by statute. We're going to look into this real quick because it does involve crowdsourcing from the industry, and it does reference some relief that was given back in March of 2021. So let's go ahead and take a look at this real quick. This is 17 CFR parts 227, 230, and 239, and 240. Those are the ones affected by this. This is inflation adjustments under Titles 1 and 3 of the Jobs Act. Now, a little intro real quick. So Title 1 of the Jobs Act added Securities Act Section 2A-19 and to define the term emerging growth company. Pursuant to the statutory definition, the Commission is required every 5 years to index to inflation the annual gross revenue amount used to determine EGC status to reflect the change in Consumer Price Index for all urban consumers, published by the Bureau of Labor Statistics. 2017, the Commission increased the annual gross revenue from $1 billion to $1.7 billion, or $1.07 billion, and today they're adopting amendments to the rules to reflect the next statutorily required inflation adjustment to the annual gross revenue amount. Title 3 of the Jobs Act added Securities Act Section 4A6 again, which provides exemptions from the registration requirements of Securities Act Section 56 for certain crowdfunding transactions. Now, remember China, crowdfunding transactions. They've been in a COVID loop for the past 6 months. They are declaring COVID over. Biden just declared COVID over today. They're lowering rates. We're raising rates. If you remember what happened in March 2020 when we lowered rates over here, market pumped. Now, the Commission promulgated regulation crowdfunding to implement that exemption. Sections 4A6 and 4A8 of the Securities Act set forth a dollar amount used in connection with the crowdfunding exemption. In Section 4AH19 states that such dollar amounts shall be adjusted by the Commission not less frequently than once every 5 years to reflect the change in the CPIU published by the BLS. So they basically have to change the CPIU every 5 years, which requires them to change the crowdfunding limits every 5 years. Now, pursuant to this directive, the Commission adjusted the amounts for inflation in the 2017 release. We are amending regulation crowdfunding to again adjust those dollar amounts for inflation pursuant to the statutory requirement. So today they are adopting an amendment to Rule 405 and to Rule 12B-2 to again index the annual gross revenue amounts included in the definition of emerging growth company for inflation to reflect the change in the CPIU. And again, this is required by statute. Now, to calculate this, first they determine the appropriate CPIU for December of the calendar year preceding the year of adjustment. So that means they're going to be using December of 2021. Because we are making the inflation adjustment for the definition of EGC in 2022, we use the CPIU for December 2021, which was 278.802, or this 2021 CPIU. So secondly, they calculate the cost of living adjustment or inflation factor. To do this, they divide the 2021 CPIU that we just had by the 2011 CPIU. The resulting inflation factor is 1.23543.1. I'm not sure why there's 2 decimals in there. I copied this straight from the filing. Third, we calculate the raw inflation adjustment, which is the inflation adjustment before rounding. To do this, we multiply the initial EGC, which is the emerging growth company, gross revenue threshold, or $1 billion, by the inflation factor, 1.23543, the product of which is 1,235,430,000. Fourth, they round the raw inflation amounts according to the convention set forth in the statutory definition. Because we round only the increased amount, we calculate the increased amount by subtracting the initial EGC gross revenue threshold from the raw maximum inflation adjustment. Accordingly, the increase in the EGC gross revenue threshold from the initial threshold is 235,430,000, or i.e. 1.235 billion less, which is rounded to 235 million under the statutory rounding convention. Finally, they add the rounded increase of 235,000 to the initial EGC revenue of 1 billion, which yields an inflation adjusted EGC revenue threshold of 1.235 billion. The amendments to the Emerging Growth Company definitions in Securities Act Rule 405 and Exchange Act Rule 12B-2 that they are adopting reflect this adjusted threshold. Now, this is the important part of this filing here. When the Commission adjusted the regulation crowdfunding dollar amounts in April 2017 for inflation pursuant to the statutory directive, that was the last time they did this basically. Those adjustments included setting the offering limit in 17 CFR 227, which is the crowdfunding related rules. And they set it to 1.07 million. Adjusting the offering limit amount for inflation using the same method we used for the adjustments in rules 100A2 and 201T would result in an offering limit of 1.235 million, or 1 million baseline plus that 235 rounded inflation adjustment. However, and this is where that reference to 2021 comes in. However, effective March 2021, when SLR ended, if you don't remember, SLR is the policy that started by the Fed in March of 2020 when we were lowering rates like China's doing right now. That's what we had so that they could continue to lend to companies during that time with low rates, with the Fed as lender of last resort. And since then, since March 2021, when that policy ended and the repo started to grow in demand, the Commission increased the Rule 100A1 threshold by 3.93 million, from 1.07 million to 5 million. So it's basically almost 5 times higher than it should have been after this adjustment filing has come out today. And then they say straight up, accordingly, we consider the current rule 100A1 offering limit to more than account for inflation and are making 0 further inflation adjustments to this threshold at this time. So yeah, they're saying basically what we had effective March 2021 is way good to account for inflation, so they're not going to be adjusting that aspect at this time. So again, all of this that you're seeing in the markets is designed. They have the relief. They've had it for a while. All the bears out there, you're about to get bamboozled.